Hey guys, on today's episode, I'm gonna take a look at my portfolio. And the reason I'm producing this video is to bring value to the viewers. And every time I make a video is a video that I wish I would have seen in my past self, or a video that I could have seen when I started investing, because I feel like I could have learned a lot from it. So today's episode, like I mentioned, I'm going to take a look at my growth portfolio, and my investment style might be a bit different from others. And that's the thing that I think makes me unique from a lot of different people, and why my portfolio is doing so well. So one of the things that I've done throughout my experience is always come with an open mind. Whenever I talk to another investor, I don't believe I know more than them. What I try to do is come with an open mind and try to pick something out of their investment styles and try to incorporate it into my portfolio, into my investing, right? Because there's so many different styles of investments: value investing, dividend investing, growth investing, mid-cap investing. There's long blue chips investing. But I believe there's something from all those styles of investing is that everybody can pick up and grab and make their own style of investing. And I feel like that's what I have done. And that's what has helped me come into this to have great returns in my portfolio. This episode is going to be broken down into a few sections. First, we're going to take a look at just my returns, and this is this page that I'm looking at. Then we're going to take a look at my position distribution. We're going to take a look at my winners. We're also going to take a look at my losers, right? It's not all pretty in the investing game, so I'm going to show all my losers as well. And then I'm going to take a look at a little more breakdown of my portfolio, of more percentage holdings and my recent activities. And like I said, you're going to see I have about 47, I think maybe it's 50 positions. And this is something crazy that I always hear, even on my Discord group. I hear it on the comments. It's like, Jose, if you have 50 positions, why don't you just invest in the SPY? Your returns are probably the same as the SPY. And no, we're going to see that my returns right now have been pretty amazing. And it's not me trying to brag, right? It's just me trying to say, if you're coming here with that closed mind, I don't think this video will bring any value. But if you want to come in here with an open mind to say, hey, and to me, right, there is no perfect way of investing. I do believe investing, you can have multiple ways. Even the styles, you can have multiple ways. I believe a portfolio with 10 positions could do amazing. A portfolio with 20 positions can do amazing. A portfolio like mine with 50 positions can do amazing. And it's not that, you were going to see, it's not that one of my position outweighs everything and that's the one pulling me up. No, I don't think any of my positions are over 8% of my portfolio. And it's just the way that I'm investing, the way that it allows me to sleep at night, to control my risk management, has helped me continue to grow these accounts. And also, and finally, before we continue, if you are new to my channel, if you are a long-term investor, if you want to learn about growth stocks, make sure to hit the subscribe button. Also, if you guys ever want to get in contact with me, make sure to post on the YouTube comments. I'm very, very active there. I'm pretty active on my Twitter. I have a Discord channel and I have a weekly newsletter. Check out josenaharo.com. But remember, all of this is my opinion. None of this is advice, and I am by no means a professional. So talk to a financial advisor before doing that. All right, so first let's start off with my returns. And I have been doing this video, and it seems to be every 20 days, so might as well continue with the trend. And this is actually wrong. This is supposed to be 7/31, not 7/30. So July 31 is my recent update, and I've actually even included timestamps right here for all the naysayers. Again, remember, I am by no means charging anybody for anything, but I just want to be as transparent as I can as well. Obviously, the only thing you're not going to see here are my account numbers, but everything else you will see in this video. So let's take a look at when I first started this tracking of videos. And at the end of the day, even though it's going to bring value to the viewers, it also brings value to me, because at the same time, it helps me track how I'm doing. So the first time I did this full account growth was in June 20th of 2020, and my overall account was up about $5,000. And let me actually break this down. You're going to see I have 3 accounts right now. And there's a reason why I have 3 accounts. Everything I do is always for a learning purpose. I first have a small account, which is right now sitting at about $3,000. That small account is an account that I invest about, I want to say $100 a week, maybe once every other week. And the purpose for me making that account was to, I kept getting a lot of questions from my friends say, hey, I don't have that much money. Can I still make money in the market? And instead of me just keep saying yes, I created this. Look, that small $3,000 account is up over $600. So it has done amazing, over 26. And that's me putting on a weekly basis. It's not that I added a full $2,000 when the market started to dip. No, it's me on a weekly basis adding money. I have a medium account. My medium account is about $11,300 right now. And that one's up about $2,900. That's up about 33%. And again, this is another, all these accounts, I put money on a weekly basis. Unfortunately, I don't have a lot of fun. Well, in perspective, I don't have a lot of funds to really have a big account, right? So every week on the market, on all my accounts, I probably put about $400, maybe $500 a week into my accounts. And the reason I started that middle account was I really wanted to learn more about this growth stock investing. So I started to, instead of kind of really transforming my overall portfolio, I started a new portfolio and really just focus on growth stock investing, or just not even growth stock, just my new style of investing. And then later on in my bigger portfolio, I would eventually start to mix everything around to try to make it into that. So my big portfolio right now is about $28,000. So if you add them all up, my overall portfolio is about $43,000. And the reason I look at it as a whole portfolio is because even though they are different in monetary value, the way I handle them are all the same. And it all depends on how my other positions are to me. So even though I have different accounts, they're all managed the same way. So it's just one big account, but it's just in different steps where I just wanted to take a look and see, hey, yes, you can make money just having a small account. Yes, you can make money just really doing growth stocks. Yes, you can make money transforming your account into a different styles. So like, all right, let's just start off with returns. And like I said, first, I don't want you to take a look at the overall position size because I do add money to my account on a weekly basis. So my position size, my overall account portfolio has increased. What I do want to show you is my overall gains, right? My gains, these are gains that I have made just through stock gains. It's not gains from my investment, from my weekly deposits. These are actual gains from my stocks. So about a month ago on July 20th, I had about $5,040 of return. Fast forward 20 days from there, it was July 10th, I went up to $8,110. And let me say this, no, I am not a trader. It's not me trading. I am more of a long-term investor. So it's not me sitting on the computer 24/7 trying to get the best buy, best sell. No, I'm just picking the companies that I feel will do great in this market, and I hold to them long term. Now, fast forward 20 days from there, my account is now 8,840. So it's even growing still, even though it's been a pretty flat line, especially if you guys have been following growth stocks. Growth stocks right now compared to earlier July have taken a small dip here and there, and I'm still getting these returns. And again, here we have my timestamps, if we can see, as of July 31st, 2020, 4:18 Eastern time. All right, so now that you guys have seen my portfolio, and we can see we have grown, right? My small account's up 26%, my medium account is up 33%, and my large account is up 24%. So safe to say I'm over double digits return overall if we take a look at my full account. All right, so here I'm showing you guys my positions, but later on I'm gonna actually break them down and who is my number one position. The thing I want to show here is, like I said, I get a lot of comments saying, Jose, you're in 50 positions. With that many positions, you might as well invest in the SPY. And to me, yes, I do invest in companies, but before I invest in a company, I need to be bullish in the market. So when I first started, and when I start investing, I start from all the way the top level. I do research on the top level of the market, And then I decided, yes, this is a market I want to continue to focus on. So for example, I've done plenty of videos on esports where I go more in the full market level, and then from there, once I agree that yes, this is a market I want to invest in, then I start looking at positions, at leaders in that business, in that market, that will ride that wave of the market. So to me, even though by me studying these companies, and you're going to see I do a lot of fundamental analysis, you can take a look at all my previous videos. Before I really, so first I find out the market I'm very bullish on. And these are the bullish markets I'm in: esports, cloud servers, tech components, cloud security, consumer products. You might be, Jose, consumer products is a big thing. But no, I'm pretty much consumer products in active items. You're going to see they're more techie based, and then business products. Again, business products might be a big thing, but we're going to see most of them are SaaS style companies, so software as a service, and also e-payment and e-commerce, future tech, and others. And then there's obviously some positions that I have that I can't really put in any of them, and eventually I want to get rid of these positions. But like I mentioned, first I start off at a full level. I want to be like, hey, these are the markets I'm very bullish on. So to me, it was esports, cloud servers, tech components, cloud security. Then from there, I started to look at businesses within those markets that I was already bullish on and try to find the leaders. But at the same time, I believe that I could be wrong. I'm 100% I could be wrong. That's one thing that I know for a fact, that I am going to be wrong from time to time. So instead of just investing one company, right, I could just invest into 7 of these companies. For example, in esports, I could probably just invest in Activision. But what if Activision does bad? I don't want to have that much of my position in one stock. So what I ended up doing is, hey, now I'm within this esports. I know I believe this market is going to do well. Now let me find some of the top leaders in this market, or some of the top, not even the leaders, some of the top growers in this market, and build off there. So now I know the esports market as a whole is going to go up. So let me find those companies that will go up with it. And that's how I pretty much go with my investment style. So these are my positions. And like I said, later on, I'll take a look more on what those positions are. But let's just, I do have podcast listeners, so they might not be listening. So they obviously they can't see. So for esports, I want my esports in theory to be 15% of my portfolio. I want cloud servers to be about 15% of my portfolio. I want tech components to be 15%, cloud securities to be 5%, consumer products to be 20%, business products to be 15%, e-payment and e-commerce to be 10%, and future tech to be about 5% of my portfolio. Again, this is not always the case, and the great thing is some of these companies kind of overlap each other. One of my, for example, AMD and Nvidia are 2 in the tech components, but they can also be kind of be shown in the cloud servers and kind of be shown in the esports segment as well. So those are even the ones I like the most when they are all over, when I can put them in actually all of my components. So in esports, I have Huya, Activision, Techie, EA Games, NetEase, Doju, and ETF Nerd. In my cloud servers, I have Google, Microsoft, IBM, and Baidu. In my tech components, I have AMD, Intel Corporation, which is one that's dragging me down right now. But still, even with that dragging me down, perfect example right there, Intel. One that I still believe I'm very bullish on. Even though I'm bullish on AMD, I'm also bullish on Intel, I'm also bullish on Nvidia, I'm also bullish on Micron. I believe there's so many room in this market that just because one company is competing against another company doesn't mean that one of them has to destroy the other ones. There's plenty of market in here for both of them to grow. But again, imagine if in my tech component I only invested in Intel. I would have been scared right now. I probably would have been losing sleep because Intel is down pretty big. But at the end of the day, AMD and Nvidia MU are all pulling my tech components up. In cloud security, I have CrowdStrike, Ping, Okta. In consumer products, I have Disney, Facebook, Berkshire, Spotify, Roku, Celsius, DraftKings, Uber, Neo. In the business products, I have Fastly, Cisco, Dropbox, Jest, Workday, Cloudera, Autodesk, Salesforce, Datadog, and Magnite. Magnite? I forget the actual name. Ticker MGNI. In the e-payment, I have C, Square, PDD, MasterCard, Opera, Stone, and PayPal. In future tech, I have Space, I have Cerence, I have SSTI, and in others, unfortunately, I do have some cash right now. I wish that cash position was supposed to be 0. And I do have Boeing, and Boeing is one that I wish I didn't have right now. And this is one I'm probably going to sell out, but I do have it right now. All right, so now let me take a look at my top 5 winners. So my top 5 winners, and I'm comparing it to my last video was on July 10th of 2020. So just to show how even small positions can really move your account. So 7-10 to about 20 days ago, I had my top 5 winners made up about $3,160 return. My top 5 winners now make up about $3,450, so an increase there. And most of my top winners have changed places. So last time my top one was Huya, Fastly, Spotify, Activision, and Square. Now it's AMD, Huya, Fastly, Activision, and PDD. And we can see PDD run is one that has given me 150% returns. So this is actually one of my smallest positions. We're going to take a look. It's one of my smallest positions. And it's okay to have a portfolio that's that diversified. Even my smallest position is one of my top 5 winners. And that's the thing. The way I invest is I understand my risk tolerance. I personally don't think I can have a position that holds 20% of my portfolio. You as an investor, you might be okay with doing that, and that's okay with you. And that's what I think makes every investor different, is that understanding your risk tolerance. Like I said, for me, my risk tolerance, I think 10% is more than enough. And just by looking at this in my account right now, I can say that yes, this position will continue to do amazing in this style. For me, again, it might be different from others. Now let me take a look at my top 6 to 10 winners. So my top 6 to 10 winners, same time last month, about 20 days ago, made up $2,090. Right now they make about $2,300, so they have increased. And again, they have switched positions. Back then it was PDD, Microsoft, SE, Google, and CRNC. Now it's Square, Spotify, C, Microsoft, and Cerence. So it has changed a bit, but still we can see even small positions like let's see, what's a small position here? Like Cerence. Cerence is one that's very small of my portfolio, but it has returned 83% and has become one of my biggest movers, one of my top 10 movers, and it's just a small position. Like I said, it's not all fun and games. Let's take a look at my losses. And I'm not only just showing the losses that I have here, I'm also going to show the losses that I have sold out. And I don't feel a lot of people do that. Like I said, I want to be as transparent as I can. Compared to July 10th, 2020, my total losses were about $1,114. Most of it came from 2 companies, Boeing and Berkshire. Those made up a huge portion. And then I did one of my biggest sold loss that I ended up doing was Luckin Coffee. And we all know how that turned out. That was that big fraud Chinese company. My losses compared to same time, so compared to 20 days ago, has increased by about $200. But we saw my overall portfolio has increased by about $800. So I'm still, even in that time, I have increased by about $600 in profit wise. So I'm still doing good. And one thing is I did sell out of certain companies, but look, Boeing is still my biggest loser right now. That one, out of that $1,300, that makes up close to $470 of loss. Then we have Intel Corporation. Intel Corporation is my second loser right now, sitting at about $159 loss. Then we have Berkshire. Berkshire is down about $50 right now. One reason though is Berkshire, I have sold out of that position, and we're going to see it later on. So that's why it's a little less loss, but we can see that loss being accumulated in all the ones that I have sold before, which is in this tab here. So even though I sold out a position, I'm still keeping track of that loss. After Berkshire, everything is not that bad. Uber is my number 4 top loser, and that's only down $30. And then my 5th loser is SSTI, and that's only down $7. And my 6th loser is Cloudera, and that's down 13 cents. So we can see, right, my top, just my top 6 to 10 winners, not even my top 1 to 5 winners, can pretty much cover my losses. And like I said, I could be wrong, and this proves that I can be wrong. So by me being diversified like I am, it helps me manage my risk. Because at the end of the day, I still believe in the markets these companies are in, but maybe I just chose the wrong one. So this helps me out at night. So now let's take a look at my positions. So on the left, I have the positions and how they were in 20 days ago. And to my right, well, maybe, yeah, to your right, not to my right, to your right, it'll be my most recent positions. So right now, my most recent positions, my number 1 is Huya, and Huya only holds 5.73% of my portfolio. My number 2 is AMD, which holds 4.4. My number 3 is Activision, which holds 4.4. And this has changed compared. Let me show you guys my top 10 right now. My top 10 are Huya, AMD, Activision, Disney, Google, Facebook, C, Berkshire, Microsoft, and Spotify. And one thing you guys are going to notice is Berkshire has moved down. Berkshire and Disney are ones I sold a bit to purchase some other stocks. So Berkshire and Disney were 20 days ago were my number 2 and my number 3 position. But I was like, no, these are not stocks. These are not businesses I am 100% bullish on right now. I'm still bullish on them, but not bullish enough for them to hold that much weight on my portfolio. So I brought them down to a percentage-wise where I believe I felt more comfortable. So now Berkshire from being number 3 has moved to number 8. Disney from being number 2 has moved to number 4. We can see I have added to some of my positions that weren't that big right then. So C last time, C Limited, one that I'm very bullish on back then, was my number 2 position, sitting at about 2.6%. Now it has moved to my number 7 position. Another one I want to say is, what else has moved? Not much has moved too much out of there. Just C has gone up in ranks, and I do continue to add on C. That's one of my favorite ones. But another thing I want to show you guys is I color coded here. The red are my top 6, are my worst 6 performers, and you can see they're all over the place. And even though Berkshire, which is my number 8 position, is one of my biggest losers, it's still not, it's not really affecting my portfolio. And you can see my top 10 winners, my top 5 winners are in green. And look, PDD is my number 17 position wise, but it's still one of my biggest winners. And now let's take a look at my top 6 to 10. My top 6 to 10 are my number 7 position, 9 position, 10, 14, and my 24th. Even my top 24th, which is only 1.7% of my portfolio, is dragging my portfolio up. So that's what I'm trying to show, right? That it doesn't matter how many positions you have. That's it. I'm not saying that, hey, go get 49 positions, because 49 positions is the magical number. That's not what's happening here. What I'm saying is it doesn't really matter. So you have to learn as an investor what type of position, what type of portfolio you want to have, what helps you sleep at night. Because at the end of the day, risk management is the most important thing. If you have 5 positions at 20% and you can go to sleep even though one position goes down 10% and you're not gonna like have weak hands, then that seems to be okay with you. For me, I feel like emotions might start to take in at that day. So to me, I understand. I understand how my investment style is. So for that reason, I'm doing that. But again, I'm not going to go to you and be like, hey, you have 5 positions. That to me is a dumb move. No, I don't. If it works for you, it works for you. And I do think, especially for new investors, especially for new investors, even old investors, right? Always come in with an open mind whenever you talk to any investor. I'm pretty sure there's something that you can pick up from them that can help you out through your portfolio. And here again, if you guys can pause this video right now to really see all my holdings. And actually, let me just move out the way so you guys can see all my positions. And like I said, if you guys watch my videos, I do research on companies. I really do research, but to me, I'm not gonna go, if I like a company, I'm still not gonna go and buy 20% of my portfolio. I dollar cost average in. So for example, we're taking a look at one of my favorites. One of my favorites right now was SE. So SE started with probably 1% of my portfolio, and I dollar cost average up, I dollar cost average down. Now it has made its way to 3.72. So it's like like I said, always understand how you like to invest and try to work around there. So now I just want to show you guys my recent activities, and this is ever since my latest video. So ever since there till now, I haven't really sold anything. The only two that I mentioned I sold were Berkshire, and I sold some of my Disney. But I bought Stone, which is I did a video on them, and everything I bought here I've actually done a video on. So feel free to check out my channel and check those videos out. So I bought Stone, I have bought a lot of NEO, but we can say even though I bought a lot of NEO, it's still a very small portion. It's about 1.5%. It's my number 33 position. But I add every so often whenever I have money. Maybe some days I might have $50, maybe some days I might have an extra $100, maybe some days I might have $75. So some days I just when I get paychecks on a weekly basis, I put about $400 in the market. And remember that this is all perspective. To some people it might seem like a lot of money, to other people it might seem like a little bit of money. But at the end of the day, no matter what kind of money I would have, I would handle the positions the same way. And we can see that with my different portfolios, right? I have a small portfolio and I have a very large portfolio, and I manage them the same way, and we can see very similar returns percentage wise. What else have I bought? I bought a lot of I bought Spotify, I bought CrowdStrike, I bought C, I bought more NEO, more Micron, I bought Intel on the dip, I bought IBM, I bought more NEO again, and I just recently bought more C today. So that's how my investment style goes. And like I said, I hope you guys learned something from today's video. Hopefully it not even learn something. I hope it provided value to you, because that's pretty much what I'm doing. These videos are ones that I wish I would have watched when I was learning to invest. So that's the type of content I'm producing. So I hope you guys subscribe. I hope you guys enjoy it. Take care, guys. Have a good night and have a good weekend. And if you're watching this after the weekend, have a good week, and whatever day, have whatever. So take care, guys. Peace, and see you.